What's up, everybody? Michael and Coco here. You're watching episode 23 of the Weekly Scan. The Weekly Scan. The Weekly Scan is all about finding opportunities in the stock market for the weeks ahead. We're going to look at 11 different stocks using technical analysis to decide whether they are stocks to watch right now or stocks to buy right now.
Isn't that right?
We're going to look at support, resistance, and I'm going to walk you through how I potentially would go about trading these stocks. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please just watch this video from the sidelines and practice via paper trading. Being that this is episode 23 of the Weekly Scan, you can look at the previous videos to see how my trade plans had worked in the past. The only thing that we have complete control of in the markets is our risk management. So in any stock that you choose to purchase, make sure that you focus on the risk as the number one key factor. You should feel very good about taking small losses here and there, and you should feel even better when your target prices are hit. Do you have anything else to say? I don't think she does. Let's go ahead and hop into the computer. All right, welcome to the computer. We are now going to go over 11 different stocks. I'm going to be walking you through the supports, resistance, target prices, and everything that I see and why I believe that these could be potentially good setups. Always keep in mind, as mentioned previously, that risk management is the number one factor in trading stocks, day trading, swing trading, whatever it might be. Just being invested in the stock market, managing your risk is by far the most important aspect. So when I talk about stop losses, make sure to pay close attention to that part. Let's go ahead and get started. So the first ticker symbol that we're looking at is ticker symbol HAL. And this is a little bit more of a longer term setup, and the reason why is because I'm looking at the weekly time frame, and we've had this nice run up and this kind of just little bit of a pullback here into the 10 period moving average, and then it's creating somewhat of a handle. This is known as a cup and handle pattern. So what I want you to do on this specific stock is to set up an alert that if it cracks above on the weekly time frame and closes above $16, this does look like a stock that could potentially break out to new highs. Now, when I say new highs, I mean high from where it's been getting stopped at right around here. As you can see, it acted as support around here, support right here before it broke down. Then it acted as resistance, and now it's acting as resistance again with this candle. And it does look like that this potentially still pull back a little bit. So I would personally trade this on the breakout. If you wanted to speculate and buy lower down here, make sure that you have a stop loss at least under this 10 period moving average. As you can see, once we broke down through it right here, the trend had changed, so it moved all the way down here. And then when we broke above it right here, it really is only tested it one time through this area. I mean, it did it for 4 straight weeks sitting on that area, but it didn't really quite close below it. So have a stop loss, give it some room if you wanted to speculate. Me personally, I would just wait for a breakout and a close above $16 to see this thing shoot higher. As far as target areas go, $20 does look like a good area for a target. Go ahead and draw a line throughout here. You saw this big gap down and then move lower on this candle. It acted as support right around this range and then acted as resistance right through here when it cracked above it. So $20 could be a good target area or an area to mitigate some of your risk. So if you get on the breakout right here and you have a stop loss right below this $16, say $15 and some change, and then it comes up to 20 bucks, you're catching $4 per share and you're only risking a little bit. Now, if you want to get out of the position completely, that's totally fine. Or you can just take some shares off the table and potentially it can even reach higher to that $25 marker and above. You would just have to manually adjust your stop loss as time continued. So this right here, cup and handle pattern, look for the break above $16 really to make a move. Let's go on to the next one. Here is ticker symbol PCG. We got some lines on the screen. We have the 20 period, 50 period, and 200 period. So first I want to talk about the context of the chart. The context of the chart is kind of just going sideways. It's not bearish, it's not bullish, it's just kind of moving sideways. I would say it's more leaning bearish than anything because of this big pullback down here, and then you have the 200 above the 50, and you have the 50 above the 20 period moving average. So it is not really necessarily in bullish context, but I still want to point out the pattern that's kind of forming. In mid-July, it hit a low of $8.35, and then it's been kind of trending upwards since that point. And then if you go back from here, and you draw a line out to this range, You can see that it's forming somewhat of a symmetrical triangle. Yes, it's in sideways context, but this is something worth noting and keeping an eye on. The longer it coils up in this area means that it could be preparing for a large move to either the downside or the upside. You can also go here from the $9.50 range right here and draw a line like that and say it's an ascending triangle. As you can see that it kind of, it had support right around here, but when it broke down and touched this area, it acted as resistance here and then kind of just bounced around sideways and is currently at the bottom of this area. So if you had a stop loss right below here and you speculated within this kind of range right here on a breakout, I can understand why somebody might do that. A target would be right around $10 because you can see that there's some previous price history right around there. So this would be a little bit quicker term of a trade unless if you were patient enough to wait for a complete breakout. And if it did break out, you want to have it break out on higher than normal volume to make sure that it is a real breakout and not a false breakout. But just keep in mind, in this type of context of the chart, when it's not really bullish, more bearish than anything, you want to be aggressive on your profit taking. This 50 period moving average sloping down right there would probably, if it did break above it, you might see some sort of rejection right there and then a retest of this 950 area and then potentially move higher or potentially break back down. So you got to be aggressive on these type of setups because of the overall context not really being bullish or bearish. All right, let's move on to the next one. Here is ticker symbol AEZS. Now this is very similar to PCG, but it's a little bit different. And what do I mean by different? Well, we have a very similar type style pattern. We have a symmetrical triangle. However, as you can see, we have big volume kind of accumulating here these last 4 or 5 trading days, and it's slowly moving up. And now if you look at this 20 period moving average, this green line, the price has closed and crossed above it, and sometimes that means trend reversals take place. As you can see in the history of the chart, when it cracked below the 20 period moving average, it retested it, got rejected, and then moved all the way down here. So is this the beginning of a trend reversal? It very well might be. Now what we can do as far as playing this, you can either one, wait for a breakout of this trend line and see a continuation to the upside. I would say have a target right around this 50 period moving average would make sense, about 70 cents. Maybe a little bit higher if you wanted to be, but I would say that'd be a good area to mitigate some of your risk and take some profits. Mind you that from 50 cents all the way to 71 cents is a pretty large percentage point gain. As you can see from the previous history of this chart, it's building lower highs. So you kind of have it stair stepping from here, then you have it up here. So you're kind of just slowly walking up this chart. So this could be potentially building itself a base to move higher. This is something that you're going to want to keep a close eye on, but also please keep in mind risk management. This could be a very fast moving stock, and the percentage point gains can mean a lot into a portfolio. As you can see, this little day right here moved almost 7.5% in a single day. So where would you put a stop loss on this? I would just have it below this lower trend line. And if it does break out, I would then move it right above the upper trend line, because if we get a back test like that and maybe see it move higher, or if we just get stopped out, and then I would just take profits on the way up, and I would move my stop loss to the low of each candle thereafter it forms. All right, let's go ahead and move on to the next chart. All right, so here is ticker symbol FLIR. And this chart, you might be thinking, holy cow, why would I buy into this? It looks very scary. That big, huge red bar right here, all this selling pressure. And then we have another red bar right here on high volume. This looks like it's going to fall through the floor. Well, the reason why I'm bringing it up is because these make for some good type of bounce trades. And why am I saying that? Well, this type of candle right here after massive selling could act as somewhat of a bounce candle. This is known as a hammer candle, and really what took place is you had all this selling, and then the bulls at 35.50 stepped up and moved the price all the way up to 37.47 in that single day. So how would you go about trading this? Well, me personally, you have to be patient. So it depends on where we open up Monday, but if we get a move above the $38, I would enter in right above that and then have a stop loss below the opening point of this candle. So, you know, call it 37.75 or 37.95 if you want to be very, very small amount of risk. And then what we want to see is potentially this being the bounce, so your order would get filled and a continuation to the upside would occur. As far as a target goes, this $39 looks like a decent target, and $39.50 as well, because if you look back in the history of the chart, you have some candles that acted as support right throughout that area. That doesn't mean that you need to get rid of your entire position, but I would definitely consider mitigating some risk just in case if we see a continuation to the downside. So be patient on this. Don't just enter in way down here with hopes that, hey, it'll bounce again from that point. It very well may. But this type of play, to make it more accurate of a trade, you just want to see the bounce actually start to take place and then capture some profits to the upside and be very, very aggressive with taking those profits. This isn't the type of trade that I would hold for multiple days personally, at least me. There might be other traders out there that say, yeah, no, this is a perfect swing trade setup. I'm more of a day trader, so I would use this to scalp in some profits. Let's move to the next one. Here is ticker symbol F for Ford Motors. Really what I just see here is the pattern kind of coiling up into a symmetrical triangle, struggling to get above this red line, which is the 200 period moving average. For those that don't understand what that moving average is, that's like the Godfather moving average. It helps to see context in a chart, and it also acts as support and resistance. So as you can see, it got rejected right here, it got rejected over here, it got rejected right over here. And the price is really just moving down like so, but yet if you look at the bottom of the chart, the price is continuing to move up. So we have this kind of pattern where it's creating multiple pivot points within this symmetrical triangle. My question is whether or not we're going to see a break above that 200 period moving average. If we do see a break above the 200 period moving average, that might be the start of a bigger move continuing to the upside. So how would I play this? Well, it looks like the price of the 200 period moving average is at $7.08. So it does look like the price struggled right around the $7. So if we get a daily close above $7 or even a daily close above the 200 period moving average on decent volume, I would say that would be a good entry point to see a continuation to the upside. As far as mitigating some risk, that's $7.75 all the way to $7.50, maybe right there, would be a good area to take some profits. Now, a move from $7 to $7.50 might not sound like a lot, but 50 cents per share move could be quite big depending on your position size. This pattern does offer up a good risk versus reward currently where it's standing, because you can really just have a stop loss below this trend line right here at, say, $6.49, and you can enter in within this coiled pattern. Or if you wanted to wait even longer, we might see a pullback to that 50 period moving average, which is at $6.48. So the 50 period moving average is another Godfather moving average. It does act as support, as you can see right here, and then basically right around here too as well. So there's a bunch of different ways you can go about playing this. Now, this isn't going to be one of those trades, most likely, that just pops off and takes off and makes this huge 30% run. It very well may, but this could be, a nice swing trade setup for somebody that wants to hold something a little bit longer than usual. If it is something that you want to hold for longer than usual, I would personally wait for a close above the 200 period moving average, just to show that, hey, we might start seeing this thing break out more to the upside. All right, let's move to the next one. Here is ticker symbol KZIA. This showed up on the dark money scan. The dark money scan really helps me see a lot of volume coming in relatively to previous days. And as you can see, there's a lot of volume here on this day. Looking back through the history of the chart, it's basically no volume compared to a crud ton of volume. However, the day itself up 50%, but it's way up here in the stratosphere. And clearly it's a nice red candle. So it opened up here, trapped a lot of people, FOMO buyers right there, and then moved even lower throughout the day, trapping in all those longs as well. So what do you have to do in this type of setup? Well, you need to be very patient on these type of setups. So what I would say is set an alert for $4.55 on your software, and if we get a pullback to that $4.50 to close that window on the gap up, we might see a bounce from that point. It'll allow you to enter in lower down here and have a tight stop loss and potentially capture some nice profits to the upside. Let's move to the next one. All right, so here's ticker symbol IZEA. What we got going on here is nice accumulation of volume these past few trading days. We had a bull pull, and then some consolidation to a flag, then we had a breakout, and we have another consolidation taking place into a bull flag pattern. This candle right here is known as a hammer candle, and on this pullback on low volume, this might represent some sort of a bounce point to the upside. It happened to bounce right at around $1.50, so a nice area, nice round number to see a potential bounce from. So how would I go about playing this? Well, there's a couple things that you can do. Depending on where the price opens up Monday, but you might be able to enter in shares right here, have a stop loss right underneath that, say $1.48, and then just wait for a continuation to the upside or potentially get stopped out. Another way you can play this is, say if the price opens up above this $1.70 mark tomorrow, say if it opens up at $1.71, you can then enter in and then have a stop loss, right below $1.65, which seems to be another area of resistance. As you can see, it got touched right here, then pull back, touch right there, and now it's acting as a little bit of a resistance on this candle. So you'd enter in right around here and then have a stop loss below that $1.60 marker right here, maybe at a $1.59. A couple ways you can play this, but it does look like potentially we might see a bounce and a continuation to the upside. All right, let's go ahead and move to the next. All right, this is ticker symbol INO. Now this has been a popular stock these last few months of trading. I had it on the weekly scan previously, showing some sort of a symmetrical triangle taking place to keep an eye on, kind of look like that. So there could be a break to the upside or a break to the downside. We had a break to the downside. However, what I want to point out now is that the 50-period moving average is acting as a very strong level of support for this stock. So this might be potentially a good opportunity to get back into this stock to see a move to the upside. Why am I saying that? Well, where the price is relative to the 50-period moving average would offer up a good risk first reward trade. You can enter in right around here and have a stop loss just below maybe this low of this candle or even below $18. Now that's a pretty large percentage point move from 18 to 20. So if it's too big of a percentage point move for you, what you want to do is lower your position size to make sure that this trade makes sense for your portfolio. You can also just have a stop loss below the low of these 4 candles right here, probably right around $19.49. That would make sense as well, because if you get stopped out, we might see a back test to this $16 range, which would make for a good entry point. Why would that make for a good entry point if you get stopped out over here? Well, let me show you. As you can see in the history of the chart, it created this ascending triangle and we broke out right around the $16 marker from here and saw a huge uproar. Now, what we haven't seen is actually a complete back test of this area yet. We did have some pullbacks, but not quite to that $16 range. And sometimes it's healthy to see those pullbacks to these levels of previously resistance or these breakout points. The current pattern that's forming is still, I would say, a symmetrical triangle like this. It is tightly coiling up and we might see a continuation like this to the side still. So it could go sideways for a little bit longer. It's just something to keep an eye on. This is not something that I would just trade right into right away. However, if we do get a pullback to that $16 range, I would say that could be a very good lucrative area to get a nice risk first reward trade set up. A break above this trend line could send this stock significantly higher. So keep an eye on this, INO. Let's move to the next one. Here's ticker symbol OPK. Overall, looking at this chart, looks like it's a nice, healthy, bullish context. We have the 20-period moving average above the 50 and the 50 above the 200. We have a nice spread taking place, which creates a lot of bullish momentum. The pattern that I'm currently seeing here is a symmetrical triangle. Price is kind of coiling up tightly here, and it looks like it might be preparing for a bigger move to the upside. And the reason why I say the upside is because of its current context that the chart is in. The 20-period moving average does look like it's holding as a level of support. We had this candle this one day come down and tap on it and then moved higher, just back into this coiled pattern. The last candle that we had trading was an indecision candle, so it's kind of means that, hey, I'm not too sure if we're going to start rolling back over to this 20-period moving average or continue to the upside. Another way you can draw this pattern is really just by going like this. The reason why I say you can draw it like this is because you had multiple tries at the price action tried to close above that $6, and then you have the trend line obviously touching down multiple times here on this area. So personally, how would I go about trading this? Well, if you wanted to be patient, you can get a break and a close above $6 on high volume. It would be nice to see high volume like that. And then you might get a continuation to the upside, maybe a pop like something similar to that. If you wanted to speculate on a breakout, you can enter in within this pattern right here and have a stop loss below the 20-period moving average or below this trend line. The 20-period moving average does act as a good level of support just by looking at the previous history of the chart. So as each day continues and the 20-period moving average continues to move up, you can just put your stop loss a little bit higher and a little bit higher from that point. This one you might need to be patient on for that break above $6, but ensure that when it does break, you want high volume and you want it to close above it. It tried to break out right here, but it was a false breakout. It tried again, 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 and then it tried again right over here. So clearly $6 is a very hard area to get through, but it looks like it is trying very hard to do it. So once we do get a break above it, this resistance can turn into a support and we might see that continuation to the upside. Let's go to the next chart. All right, here's ticker symbol Z. This is Zillow. Big, huge volume day that came in. interesting kind of breakout above that $75 range, but I want to point out that this could potentially pull back a little bit and might set itself up for a good risk versus reward trade. Overall context of the chart, it's bullish. Why do I say it's bullish? Well, not only is the 20 period moving average above the 50 and it's way above the 200, so you have a nice spread right here. Had the golden cross over here when the 50 crosses above the 200, and then you had this continuation to the upside, but clearly it's in this nice bull channel. You go like this, and you could go from this point all the way up to here. Clearly, the price has been making multiple pivot points within this bull channel. And then recently, the price did come up as high as about $85 and then got rejected from that area. So what could potentially take place here? Well, I would say be patient and set an alert for if the price were to come down, I would say $71 to $70, this range right here. And we might get a pullback to that level and a continuation to the upside in this bull channel. That right here is a lot of volume in a single day just by looking at the previous history of the chart. And how you typically trade these bull channels is that you wait for a pullback to take place from a previous area of resistance and or support. So clearly it had resistance around $70, $71, and then it broke above it for a huge move in volume. Now what we need to do is just see if a pullback takes place to that previous breakout area and then a continuation to the upside. This is a very, very high beta stock. As you can see, it's volatile from this point to this point is $70 to $75. And this previous day's candle really went from here to here. So that was basically a low of 75 to a high of $85. That's a $10 swing per share in a single trading day. So make sure you monitor your risk on stocks like this. That is all I have for you on today's weekly scan. I will see you back on Monday. Goodbye.